Hey, good morning, everybody. Morning, David, George, Sledge, Pat, Francois, Craig, Mary, Arturo, Al, Alan. Glad to have everybody. If you're new here, maybe you don't know how to chat on the live stream, well, all you got to do is hit the subscribe button over there on the bottom corner where the monster is. And you know what? A few seconds later, you'll be able to chat with us. But it's only while we're live. If you're tuning in later after we're no longer live, well, you got to leave a comment or come join us in Discord. If you want to join Discord, links in the description of this video. Like, there's a box right down below here. Click that, and it's like $5. You got to be a client to get in Discord. So that's the lowest price offer I have, $5. And you know what? It's a heck of a deal. I give you a watch list every week set up with these roadmap line stocks, set to bounce. And even give you a video talking you through what I'm looking for there to be a potential trade on it. So works out pretty well, I feel like, for people for $5. Great value. And but as always, I constantly say you don't need to buy anything. You can just come here, get free stuff, and all trading involves a substantial risk of loss. Past performance not necessarily indicative of future results. I may be full of crap. Like, nothing I ever say may ever come true again. This presentation is intended to be informational, educational, and fun. It is not a recommendation to buy or sell anything. Like I said, don't buy that $5 thing. Don't buy any financial instruments. Don't put your money in the stock market. This is a risky game. If you can't afford to lose that money, you shouldn't be doing this. This is not a get out of financial problems free card, trading in the market. Some say it's gambling. I think that the high probability patterns I use, it's a little better than gambling because I tend to come out ahead. But, it took me a lot of years to figure this out. And why I do this is to try to help you not spend I've been doing this 20, 25, 26 years now with real money. And I actually started in third grade. So I've been doing this like 38, 39, almost 40 years. Playing this stock market game. That's literally what we called it in elementary school, the stock market game. Filled out Scantrons, and you mailed in your orders, and they would mail back a couple weeks later a statement. And so if you've never traded by mailing in your orders, like, that's a whole different level of tough. Anyway, if you desire personal financial advice, you need to hire and consult a financial advisor, and make sure it's not a robo-advisor because, well, AIs may do good, but generally they just do the same thing for everybody. And you want personal financial advice, like what is right for your financial situation. So you need a real person, not a robo-advisor. All right. Morning, Andreas, Alan, Michael. I love it. Every morning, Michael, right together. Michael. Larry, Maurizio, welcome, everybody. Glad to have you. If you're new, make sure you shout it out. Yeah, Friday Eve. It is Thursday already. Where did the week go? Almost done with this one. And yeah, so let's actually get in some charts and some stuff. And my number one indicator, flashing reversal right here. Okay, can't look at it on log scale. Yeah, got it. Let's try to put it back in not a log scale. There we go. We popped up S5FI. This is stocks above the 50-day moving average. I have two big red lines on here because once we exceed the red lines, we're in reversal territory. Now, as you can see, just right back here, last August, hey, we spent quite a while up there. Quite a while. Now, what does that mean? We could spend a couple months up here. We could. Does this feel like the market that's going to hang out with a lot of S&P 500 stocks above their 50-day moving average? I don't necessarily feel that way, but we can keep rocking it. We can inch right on up to where we're making all-time highs in the 90s. I mean, look, every time this pops up here like this, we tend to roll. All right? Sometimes we get overexcited and then we roll extra hard all the way back down to the bottom. Sometimes it takes a while. Sometimes it goes really fast, like right here, really fast, right back down to the bottom, really fast, right back up to the top. All right, be careful. I guess that was November. This was August right here. August hung for a couple, not a long time. I mean, that was August 10th. And by the time we got the big drop, August 26th. So 2 weeks. And then we were already rolling before we got the big suck down. And then we made it to the bottom September 22nd, and it was October. So we hung out at the bottom for a month, trying to break up, pull back before we could get going again. So this is my caution right here. I was cautioning here. We're likely to pop. We kind of popped, and we, right back up, new highs. Not new all-time highs, but new highs for the year. And be careful. This can take us right back down, a deep correction. And I do have to warn right here. If you haven't seen this, I haven't updated this since 2 weeks ago. We are hanging out right up in here. We just keep chugging on days. This is the number of days, the duration of days between 3% plus drawdowns in the S&P 500. Number of trading days post World War II. So this is all the examples of 3+% pullbacks in the S&P. That's a lot of them. All right, we don't even have them numbered on the bottom. I got this from Bloomberg. Right here is the number of days over here. How many days? Average between the pullbacks is 47. The median, 38. We are hanging out right near, I think it was, we're hanging out right at 80 now. Maybe going through 80. We're chugging up right in here. We're going to get near 100. And then, this could be the time where we set a new record. We go longer than 300. I don't feel like that's the situation we have going on in the market, but we could do that, 0.1% of the time and set a new record. I just think you should be careful because, more than 80, this is like a 15% event, maybe a 10% event right now as we've creeped on up in here. This run, 90% of runs prior to now have corrected more than 3% by now, had a 3% drawdown. All right. Please be careful. Now, the CPI numbers coming in yesterday made me laugh a little bit. That especially the news story I saw on NBC nightly news. Inflation is finally almost back to the Fed's target rate. Inflation is dropping. Prices are getting cheaper everywhere. Wait. Inflation slowing down is not prices dropping. And in fact, right here, this up 16.9%, set a new record for all-time price increases. And this is motor vehicle insurance. This is something we all have to have. We're like legally required to have it if you're driving a car on the street in the United States. There are uninsured drivers out there, but for most of us, if you're gonna be a sane, normal person and cover your CYA, you got to have insurance, right? Insurance prices. This is the CPI of insurance. The middle price is going up 16.9% year over year right now. I mean, setting an all-time record on the rate increases year over year on consumer motor vehicle insurance. It's ridiculous. And that's all because cars are more expensive, repairs are more expensive, medical bills are more expensive, and litigation costs are more expensive. Everything, this is kind of trickling through. And so if you're feeling that, I definitely saw that bill. I was like, holy crap. I used to pay $200 a month. Now I'm up to almost $400 a month on my monthly insurance. Of course, I do have a teenage driver, but even with my previous teenage drivers, the insurance wasn't as high as it is now. It's borderline ridiculous. And I got old vehicles. I can't imagine if you had a new vehicle. Anyway, right there. Let me know in the chat if you're feeling that. I'm definitely seeing it on my bill. So there you go. Reversal, highly likely, and the CPI full of crap. Let's summarize that real quick. Now, popping into the calendar. Where did the calendar go? Pull this back over here. There we go. Refresh so that we can get the PPI number. PPI number fresh out this morning, down, below the estimate. So positive, right? And unemployment claims down below the estimate. Looks like we're going up. Everything's great, right? Market should be going up. Well, we'll talk about it here in a second. What I see there now. Tomorrow, 10 a.m. Consumer sentiment and inflation. Those will be market moving numbers, but they'll come out while the market's open. We'll talk about them before they happen, and I guess it'll be Monday before I can touch on them, on what actually got announced during this show here. So there you go. There's the warnings all the way around. Yesterday morning, we talked about this pattern on the 30-minute here. Look exactly what we did. Look at that resistance right there at the level. Pulled right back down to support. Exactly like I outlined. Exactly. I mean, I couldn't have gotten that better if I was damn lucky. So right there, found support, and next target right up here, 45.50. So there you go. This is the likely path for the day. That's kind of the bias. Now, at any point, this can break down. If we start getting back below, right now, it would be this level. Right here. Set an alert, 45.15. Right there on the ES. This is not, the prices are a little different on S&P 500. And we don't have overnight data that's showing this, so makes it more difficult to chart that way. But right now on ES, if we start breaking 45.15, and not just a spike, and if we do one of these like long tail things and then end up closing above it, that doesn't count. We need a close and then continuation lower. That's your warning that we're going lower. All right, that's the level right now. Otherwise, we're probably going up to 45.50 before we turn down. All right, it's pretty simple, pretty clear right now. There's the path, there's the pattern. It's a classic pattern that I follow all the time, and it looks like we are likely to ramp right up here before we roll. All right. Any questions? Let me know in the chat. S&P 500, gappy, and we're going to gap up today, so not much to work with there. NQ, and before I say something dumb, I'm going to zoom out to make sure that I have all the data. Yeah, we made a higher high. Yep. I thought we made a higher high. Looks like we're on the path to go up to this 15,645. We may come right up there, find resistance, and do the same pullback. If that holds, then we go up. If it does not hold, then we likely go deeper. Is the path on NASDAQ. I thought we made a higher high. I had alerts said that, but yesterday was a little crazy day. So there you go. That's the path right there. Russell also holding bullish, holding quite bullish. Didn't get the retrace back to the 100. I was kind of expecting that. It kind of held right up in here. Now, this is interesting. We could get a flash pullback and bounce, or we could just break out. Like it can consolidate here for a little bit and then just push on up. Like that's the other thing that sometimes happens. Less common than the pullback. Sometimes we just churn sideways and then pop. All right. That's the lower probability, but that's why usually I'm not trying to trade that last little bit because it can be sometimes unpredictable. I'm either going to hold my position for the bounce or just book my profit and wait. So there you go. Oil. Getting up to the roadmap line, finding a little resistance. You know, daily roadmap line right there. We were right up there yesterday, holding in there today, finding a little resistance. If we can get on the upside of that, above 77, probably going on up here. And the head and shoulders pattern could play out all the way up here, or not head and shoulders, but that's a wedge pattern. The wedge pattern could play out all the way up at 84.50. My ideal target right here around 80 to 82. Got to get above the roadmap line though. Gold. This looks like the confirmation of the entry here. This is what I'm talking about. Not just a spike reversal. This is a close up. Getting 65 this morning. I'm probably going to be on, I didn't do it yesterday. Busy day, but today I'm probably going to be on the hunt for a position, a long-term position, probably out to 2025 on GLD or some other, I already hold GOLD, Barrick Mining stock. I'm going to be looking to add something else. Definitely. Unless we just drop out all of a sudden. Bitcoin, consolidating. Still just consolidating. Still just waiting. Target still above us. And the longer we consolidate here, the bigger the move might be. So if we echo that move from March into April, it could take us up into 40,000 area. And people are going to get really excited on Bitcoin if we do that. Ethereum, not looking ultra bullish. Actually looks like that's kind of bearish with that lower high, and we may go lower even with Bitcoin going higher. Dollar almost down to the target. Look at that baby, 99.75. I talked about it. If you weren't on top of it, I'm sorry. That's highly likely to, I mean, the most likely thing, bounce here, come back up here before we get the extension down to here, but it could just run on down to 98, and we have the bigger pattern down to 95 area, 96. That's been holding in here for a little while. So there you go. There's your levels on the dollar: 99, 98, 96, 95. We'll see what happens. There's a little bit of confluence right there around that 97, so mid 90s, kind of where I'm expecting to find some support for now. We'll see if this plays out. All right. Another thing though, like with the dollar dropping like that, how come metals aren't ripping more? I mean, how come this isn't making all-time, this pattern? Metals are not necessarily tied to the dollar, so be careful. This is still in a downtrend here. This is still a bigger bearish pattern. Copper can still go lower down to 275. Be careful chasing copper. Be careful chasing the mainstream media narrative. All right. GC and stuff. It's looking like we're going to reverse, but that's gold. But look at it. I mean, we're not, with the dollar dropping like that, the gold's not participating. Like it hadn't even hardly moved at all. While we've got the dollar pushing down to lows that we haven't seen since forever here. All right, be careful of the narrative. Be careful. SLV is probably going to be a good play. All these things are going to come to a head. Carvana popping. Look at that move. Beautiful. Have next resistance right up here. Maybe they saved the day. I don't know. They lose a lot of money. Scheduled to lose a lot more money. And can they do the Hail Mary and stay in business? I don't know. Right now, it looks like they're going to come up and retest resistance. The pattern right here showed that they're exceeding everything that I usually look for on a target. And for gosh sake, be careful. It does have another little resistance right over there. Looks like it's going to come back down. I would expect a move back to the roadmap line. And hold there, then it can go up again. I would be freaking careful. That's what I got to say about that. TGTX, that's a biotech pharmaceutical therapy, blah, blah, blah. I don't usually like to even look at these, but it was making first, these are all off stock twits. Number one stocks to talk about today. And, trending, probably come back to the roadmap line and then possibly extend out to 40. Disney, I mean, target's down here, 76. This is a bearish chart, and I expect bearish continuation to the downside right down here. Maybe not today, maybe not tomorrow, maybe pop up to the roadmap line again. It's been there, in the not too distant future here. We may pop up there one more time before we can roll on down. I do expect lower prices before we can see constructive prices on Disney. DAL, beautiful move. Does have resistance right up here. Got some stuff to work through. If we can get on the upside of 52, we could go up and retest these highs from back here, where it had that was a lot of resistance up there around 60. So watch out. That one may retrace again. It does some volatile moves. Look at those. Hadn't done one in a little while. Might be time. Be careful. All right. PEP, PepsiCo. Still trying to work on the breakout. Got to get above this 188, and really more ideally above 192 to see an extension higher to like 201, 207. Otherwise, we could be in store for a return back down to this support zone right down there. BYND trying to break the roadmap line. Big red candle. If we get a close back down here, that's going to be bearish and probably result in a lower prices. And this may take a couple days to get back down here. This is I'm highly cautious on this one. This is not a time to be messing around here. This can rip you back down to the downside, and it's not high probability either way. This was kind of a three-wave move up, very extended move too, kind of like Carvana. See that out to the 1272. If it can pull back and break on up, that can be bullish, but be careful chasing that one. I mean, this is an unreliable pattern right now, and it can definitely result in lower prices. SoFi, just churning in here. Looks like it's probably going to come back to the roadmap line. That's a lower high. Be careful. Marginal lower high. It's a consolidation. Like I said, we can just churn in here. We kind of bounced up, came back to the 100, didn't make it out to the 1618, made a lower high. This looks like it wants to go lower, but it can just do that sideways consolidation thing, charge back up, and then pop again. HIMS, HIMS, HERS, Health. If it can hold the roadmap line and bounce, that's positive, but got to get above $10 or $11 to go for 13. Otherwise, we could go deeper. Maybe come down and retest these. See, I made a high here, made a high here. That was resistance. We may come back down a little deeper to 726. CTAS, yeah, right out to the targets, 499. Kind of expect a retrace after this move. That was a power move. Took a lot of energy. Need it to retrace to get more energy to go again. 3D Systems, that's a gnarly chart. Not bullish yet. Not at all. That's just sideways consolidation inside this big range. I mean, let's be honest. That's not going anywhere. It's just consolidating at the lows. FNGU, it could extend to 214, but it also can come all the way back down to this roadmap line, back down here, very easily. Be careful chasing that. Micro sectors, FANG, index 3x leverage. That is leverage. For God's sake, be careful on leverage. Leverage cuts both ways. Remember, it can rip you just as fast as it can make you money. And looks like we're almost to the target on Meta, 320. I've been calling it for months. It's almost there. Make sure you protect your profits. This is not a time for complacency. That can be the top. We can retrace very deeply after we get here. It took a lot of energy to get back up here. I've been talking about it since January. For gosh sakes, man, be careful. Or even lady, man and lady, be careful. If this is my money on it, I would be careful. I don't trade Meta because me and Meta don't get along, kind of like me and Lulu. Be careful. Please, we're almost to the target there. Now we can break out, we can go all-time high. I'll update you when we do. Right now, that's my resistance right up there, filling that gap. I've been talking about it for months, and we're almost done. And we're $5, $6 away. TTD, this is looking positive, left some gaps. This is looking extended and may need to come back to the roadmap line. Haven't been back there since March. Of course, the market, that's the last correction we had. So be careful. We could just come back and retest the breakout here. You can see it had a lot of trouble getting through, popping. It may come back again before we can move on up. NVO, back to the roadmap line. Can it find support here and bounce? I don't know. It's pharmaceutical. They do unpredictable things based on drug trials and news and crap like that. So be careful on NVO. Reoccurring theme here is be careful. Snow, having a lot of trouble breaking this resistance. It may need a deeper retrace. I wouldn't trade this with my money right now. That's an unreliable pattern. Lots of stuff that's moving is making unreliable patterns. ENPH breaking the... did this before, all right? Don't get complacent here. We did this before, right before earnings. We broke out above the trend line, and then, ouch. Doing it again, maybe come up closer to the roadmap line. Be careful. That earnings coming up, maybe another dip. I've been looking for this target down here around 115. If we can get down to that level, we may be able to work in some kind of reversal, but it could extend lower. I mean, it could go on down to 50. Maybe like JT with the Bidenomics and the green plan and the infrastructure bill. There's no way in phase can be going down. But look at this. It's been going down for a while. That's not a bullish chart. I'm sorry. PANW looks like it's coming back to the roadmap line. It's been at the targets. How low can she go? Support's right down here around 213. And the roadmap line may extend right on up to that support. It'll be support now. It was resistance before. Maybe right down here where these come together. So watch out for that. Baidu. Still working on the head and shoulders. Not really anything reliable until we can break out. Otherwise, we may get another deep retrace back to support. Sony came back to the roadmap line. This is a new setup. New potential setup here. Zoom this up so you can see it better. Dropped right back to the roadmap line. If we can break back above, right in here at 97.50, we can get a move up to 104, 108. Good potential. Stuck right in the zone though. Watch for it to turn down right here. All right, if you're chasing this aggressive, that is an aggressive type entry right now. I would watch for the turn down just above us here at 97. It could do it at 95, 97, but 104 would be the price if this thing gets some legs and breaks right on up. VSAT, ouch. Ouch, Viasat. That's retesting the lows. You can see that right there. All the way across. Support, 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 support. Again. Is it going to break lower? If we get below this low right here, we can extend lower. Be careful. PGR. Ouch. Another one. Extending lower. And that looks like, let's see if we do this. Right up to that 618 level. That's the resistance I was talking about on Sony. Turn down there. Highly likely to get down to this 108 area. Progressive. This circles back to the insurance thing I was just talking about. Insurance rates going up like crazy. ALL also getting hit. These things, they're not very profitable right now. That's why they're raising rates. So once this trickles through, it may take 3-6 months, may take a couple quarters before they start making money again. Raping the consumer on the insurance rates. You know, it may take up to a year because you got to rerun all those policies. They're not going to trickle out for a while. So insurance companies probably going to bottom here maybe later this year. BJ Wholesale, I don't usually go with a fundamental story, but that one's just kind of one that makes sense right now. This looks like a bigger bearish pattern right here. Lower high. And we're right down to the target, possibly down as low as 58. We can reverse off of right in this area, though. This was the target for the correction. We can extend lower. We can come all the way back down, retest these lows. So watch for a reversal on BJ's. Needs to get back above the roadmap line. Fastenal looks pretty promising here, actually. That's a drop, but probably back to the 55 area, and then extend out to 61. Classic pattern. And if we can break on out, 70 on the upside. And coin getting a little pullback, trying to break out. 115 is the upper target here. This is like that spike up and reverse thing I was talking about. We don't want to see. Whoops, turned something on that I didn't mean to turn on. See, that's the spike up and that's the reverse. Like, that's what we don't want to see on S&P 500 and stuff like that. Spike and reverse, that's not continuation. We need continuation to get up. You know, this is just, it broke the high, but slammed right back down. Need coin to get some more excitement so it can get up to that 115 level. Not holding above that breakout level. While that is a higher high, that's not overly bullish by getting slammed right back down. Now, if we can find support right in here and break again, probably going on up to this 115 high up here. Gotta wait for it. 98 would be a beautiful place to run up to before we retrace again. All right, that's kind of the list for the week, or for the day, for the day. ES, my expectation, kind of gave that to you early. Looking for that micro, 30-minute time frame extension up to that 45-50 area, and then watch out. Watch out. Biased up, and then we got to see what happens. If we start breaking below 45.15 right now, that's the indication we're going on down. So there you go. That's what we got. Mara didn't make the movers list today, but coming up strong so far. Up 4%. Beautiful. Next extension looks something like 1868. Long term, back to the daily chart, looking for the 20 to 30 area right up here. It's been my long-term target for, since probably last fall. Been looking for this, and that can be a top for a while. If we get up in there, a while could be a couple months. I don't know. The head and shoulders target pattern plays out at 32, so we could see this move way on up. And bigger picture out to 2025, I expect triple-digit numbers, but we got a lot of stuff to work through before, and a lot of time in the market before that. All right, everybody, have a great day. We'll see you later. Be safe out there. The account you save may be your own. Remember, nobody cares about your money more than you do. All right? I promise you. Even those financial advisors, they care about making your money their money, but they don't care about your money more than you do. So if you want to keep chatting with me all day, I'll be in Discord.